Hi, and welcome to episode 11 of the Travel Like a Boss podcast. This is Johnny, and this week we have David McKeegan of Greenback Expat Tax Services. I'm really excited to have David on, and we're going to be picking his brain about all your tax questions. Hey, David.
Hi, how you doing?
Yeah, doing really well. I'm excited to have you on.
Yeah, excited to be here.
Yeah, very cool. So today I wanted to ask you basically all the questions that, as a new business owner, online business owner, especially one that's traveling around and living overseas, all about taxes. And I'm sure these questions are going to be the same ones that a lot of other people have as well. Things like collecting state tax. What can I write off? Can I write off my flights and my hotels? How can I get away with basically writing off more taxes? And if I should file for an LLC or if I should just continue being a sole proprietorship. But first, I wanted to ask you the really big question that a lot of people have questions about is it true that if I'm out of the U.S. for more than 330 days a year, if I don't have to pay taxes on the first $95K of income?
Generally speaking, that is true. Now, what you're talking about there is what's known as the foreign earned income exclusion. And the way you get that is you file Form 2555. And there's two qualifying factors in order to receive it. You either have to meet the physical presence test, which is the test that says that you are outside of the United States for 330 days in a 365-day period, or you have to be a bona fide resident of a foreign country, which basically means that you live in a foreign country, you work there, you have no intention of returning to the United States, and you're settled in a foreign country.
Okay.
So most people who are sort of in the digital nomad sphere are going to qualify via the physical presence test. So basically living outside of the U.S. For 330 days in a 365-day period. And that doesn't have to be a calendar year. That can be any 365-day period.
Yeah, so that's fantastic. So if I wanted to go back for Mother's Day for a week, wanted to go home for Thanksgiving for a week, wanted to go home for Christmas for a week, I would qualify.
Yeah, exactly. What we do, and what I would recommend to people is that you actually just list out how many days you're planning on being back in the U.S. and what the travel time is and everything like that. Because even a part of a day in the U.S. counts as being in the U.S. So you want to make sure that you've got plenty of scope to get to your 330 days.
Okay.
The other thing, anybody that lives in the Northeast, I'm from New York originally. If you're going back around the holidays, it's always best to leave an extra day or two just in case you get a big snowstorm or something like that and you get stuck at the airport.
Yeah, you definitely don't want to have a $30,000 mistake.
Exactly.
So I heard that, I don't know if it's true, but they said I've heard they're pretty nitpicky that if you're like travel time, let's say you're on an airplane flying over an international water, if you're on a boat, that doesn't include those 330 days.
Yeah, the 330 days is actually time spent inside a foreign country. There's a lot of very specific rules about what happens when you go over various airspaces and U.S. airspace or foreign country airspace and when the clock starts. Okay. But the basic rule is that it starts at midnight. So if you land in for argument's sake, Mexico at 11 p.m. on January 1st, your first full day in a foreign country would be the second, not the first.
Oh, wow. Okay. So you definitely want to have a nice buffer. But the nice thing about that is, I was talking to my buddy Anton about this, and living in places like Chiang Mai, Thailand, and a lot of other places in the world, maybe even Berlin, you can get away with spending $30,000 living overseas the entire year. And that will include, basically all your expenses. So it's basically like living, getting paid to live outside of the U.S. for free.
Yeah, you can avoid or you can exclude so much of your income from tax that it's really beneficial. A couple things to note, though. As the name implies, the foreign earned income exclusion is only for earned income. And it's only for foreign earned income. So if you have rental properties in the U.S., that's not going to be excluded because rental properties, dividends, capital gains, those things are all considered passive income as opposed to earned income.
Okay.
Now, I will qualify this or clarify this by saying that even if you're working a 4-hour work week, so you and I would consider your business to be providing passive income. That's probably still going to count as earned income, not passive income.
Okay. So let's say I have
passive income is things that really are passive, rental income or dividends, interest income, that kind of thing.
So let's say I write an ebook. I'm here in Thailand. I write an ebook. I sell it to Americans through an American company like ClickBank. That would still qualify as foreign earned income?
I'd have to research that specifically. I'm not 100% sure because that could be considered a royalty. So royalty may fall under a passive side as opposed to earned.
Okay, so these are all things to look into. But I guess let's say I'm a web developer and I'm taking on U.S. clients, but I'm doing it here in Thailand or anywhere overseas. Would that be foreign earned income?
Yeah, because you are doing the work and you're overseas, so that's foreign earned income.
Okay, so I'm definitely sure there's a way that I can, instead of having it be a royalty ebook, it could be me actively selling these books and working.
Yeah, exactly.
Okay, that makes sense. All right, well, so I think there's a lot of people that are going to be in my shoes where this is really my first year making a lot of money online. And, it's been a dream. I read the book, 4-Hour Work Week 4 years ago. And I'm sure a lot of people in the same boat where they made a little bit of money online, but not really enough to have to worry about taxes too much. I guess the first question would be if I make so little, like what's the least amount of money I would need to make to even have to file taxes? Like, let's say I quit my job, decided to move to Thailand, live off of savings for a year, but I make a couple $100 here and there online. Would I still need to even file taxes?
Yes. If you're self-employed, if you're making over $400 a year, then you have to file a tax return.
Okay.
So, usually if you're not self-employed, the limit would be closer to $10,000. And, if you're somebody that's just living off Social Security or something like that, if you're just living off Social Security, you don't have to file taxes. But unfortunately, if you're self-employed and you make over $400 a year, you do have to file a tax return.
Okay. Well, that's actually a good incentive because I'm sure there would be a lot of people listening to this who would think, you know what, it's my first year quitting my job. I have some savings. Let me kind of just take it easy, and not have to pay taxes on the first 10 grand. But this actually kind of just lights a fire in your butt, thinking, okay, well, if I have to pay taxes anyways, I might as well really just start earning income while I'm living abroad.
Yeah, you could see it going either way. It's either don't work at all and sit on the beach and enjoy yourself because that way you can avoid it, or it's start getting your business going because you're gonna as soon as you hit that $400 mark, you're gonna have to file anyway.
Well, I'm actually a little bit excited that even though I'm not looking forward to paying taxes, I'm not looking forward to to dealing with it all. It's a high value problem because I'm actually making money this year. And I'm growing a business, and it's it's one of those things that you kind of have to do that comes with success. But it's good to have guys like you and services like Greenback to just be able to help me out. So when I first started with my e-commerce business, it was just about 5 or 6 months ago. I wasn't sure if it'd be profitable or not, so I just started it as a sole proprietorship. And I told myself that once I hit a certain amount of sales, then I'm going to switch over to an LLC. Was that a good idea or a bad idea?
Well, it really depends. When you're bootstrapping, you don't want to spend a ton of money up front. You don't want things to slow you down up front, like trying to figure out where to incorporate or how to do that, because it'll just get in the way. So, I think what you're saying you did, which was, prove the concept before you worry about some of that stuff, is probably the right thing in most cases.
So now that my business is bringing quite a bit of revenue, and I'm going to have to start paying taxes on it. Is there a big benefit for me tax benefit for me to have an LLC versus being a sole proprietorship?
Well, the main benefit of any sort of incorporation is the elimination of personal liability. So, if you're selling widgets, and the U.S. is the most litigious country in the world. So, if somebody buys your widget and it breaks or it hurts them in some way, they can sue you for that. But if you have a corporate entity set up, then the liability would sit with the corporate entity, not with you personally. So, having that entity allows you to avoid the liability side of it. Now, something like an LLC is what we call a pass-through entity. So the income and the profit from that LLC will flow directly onto your tax return, which is different than what you would call in the U.S. a C corporation, the letter C corporation.
Okay.
And in that case, the corporation, again, it has its own liability, which is separate from the shareholders of the corporation. But the corporation is taxed as its own entity. So, the C corporation pays tax on its earning or on its income each year. And then it can distribute dividends to its shareholders, which are then taxed again. So That's the double taxation of a corporation.
So that definitely sounds a lot more complicated than the LLC and just having it pass through. I guess ideally, I mean, as a new entrepreneur, as a small business owner, our goal would be to have the LLC not only to limit our liability, but also so we can write off a lot of tax business expenses.
Yeah, the IRS is extraordinarily strict about what can and can't be written off. Just a couple quick examples for you. Let's say you take clients out to meals. Generally speaking, you can write off the client's meal, but not your own. If you're traveling for work, the time spent on the business part of it, you can write off. But if you travel out to Thailand for work and then you spend 1 week on the beach and 1 week in a factory, the week on the beach, that part of it won't be eligible to be written off.
Okay. So I think a lot of people have the misconception where as long as we're, technically traveling for work, everything is business.
Yeah, it's not quite that loose and fancy free, if you will. Okay. I think probably 30 years ago you got away with a lot more of that kind of stuff if you were a business owner. But over the years they've tightened all that up so much because people were using and abusing corporate entities to give themselves lavish vacations and things like that. And so the IRS has really tightened that up quite a bit.
Okay, yeah, that makes sense. I mean, because I think at the end of the day, it's a fine line between not wanting to overpay in taxes, having a lot of the benefits, but at the same time, not dealing with an audit because that would be the worst nightmare.
Oh yeah, especially if you're overseas, that kind of thing, it could be a real headache for you.
Okay, yeah, definitely, and it's good to know now, and not have my hopes up too high, thinking I can write off every cup of coffee, every coconut I sip on. But I don't know if this is true at all, but somebody mentioned that one of the benefits of having an LLC is that they kind of expect you to reinvest like the first $35,000 of profit into the company per year, so you don't have to pay taxes on that. Is that true, or did I just make that up?
I haven't heard that one. What happens with an LLC is the income passes through to your personal tax return. So any income in there would be taxed at your personal tax rate. Now, if you're living in Thailand and you're using the foreign earned income exclusion, then for this year, the 2013 tax year, which you'll file your taxes for in 2014, you'll be able to exclude $97,600 of your income. Of the profit of the business, which would pass through to you.
Okay. All right. Well, that makes sense. So all right. So let's say, for example, I'm flying out to Thailand, and let's say my businesses are, I have an e-commerce store, which, even though yeah, I'm working out here in Thailand. I'm building it here. I'm fulfilling everything here. So that definitely qualifies. But what if somebody also had other businesses? Let's say they write travel blogs or travel books. Would then them going to a beach and doing research, scuba diving or doing these excursions, would that qualify then as part of their business expense because that's literally their business. They're writing about the travels.
You'd really have to look at it on a case by case basis. Some of the expenses you can probably write off. But I don't want to give you a blanket yes or no because, the IRS, the tax code is, I forget what it is, 5 times larger than all the works Shakespeare ever wrote. So, it's one of these kind of things if you ever try and read it where, you can do this, but you can't do that. You can do this unless this happens. So it's really, you don't want to give a blanket answer to something like that.
Yeah.
Some of the expenses you'd be able to write off, some of them you wouldn't. But you really want to look at it. You want to make sure that you're saving receipts. You want to make sure that you have all the records of where you were, why you were there, what you were doing, what the product that came out of that research was, in order to make sure you can write off as much as possible.
Oh, that definitely makes sense. Well, I think one of the cool things about Greenback, and I actually just signed up personally as a personal client a week ago before even contacting you.
Awesome.
Yeah, is that I was assigned a CPA. Her name is Daria, one of your staff members. And it's cool that after I upload, the basic files, I had a form that, with all the common, questions to fill out. And then I'm going to upload some of my bank statements and income statements. But it's cool that I have somebody, that I can just email or talk to and ask these specific questions.
Yeah, I really think it's one of the things that differentiates us from a lot of the other companies out there. All the people that do taxes for us are either CPAs or IRS enrolled agents. We're not outsourcing this work to India or China or anything like that. Nobody really wants their financial dirty laundry, spread across the world in that kind of way. But you can also build a relationship with the accountant you're working with, and as you work with them year in, year out, you'll be able to, you'll get to know them, they'll get to know you, and it can really build a rapport where if you have a tax question, you just ping them an email and they respond to you with it, and the idea is just that you'll be very at ease working with this person because you'll know that Greenback is taking care of the tax side of things, so you can just focus on running your business.
Yeah, because taxes are very, very complicated. And I remember hearing one of your interviews, and I'll post up the video on our show notes. It'll be Travel Like a Boss podcast, episode 11. There's a video that you basically talk about you can either spend all of your time becoming a tax expert, or you can focus on your business, you can make more money, you can enjoy the fruits of it, and let us worry about it.
Yeah, exactly. And there's a lot of different cases where that makes sense. I don't know if you read The Economist, but there's an article in The Economist about travel deals that people are getting. I don't remember the specific phrase they used, but it was basically where you buy a ticket between, say, London and Singapore, and then you add on a really a short flight between the Bahamas and the Caymans or something like that. And it messes with the algorithm that the airlines use.
Okay.
And so you avoid the fuel surcharge.
Oh, that makes sense.
And I was talking to a buddy of mine who's also an entrepreneur about this, asking, hey, have you ever done this, or have you ever heard of anybody that does? And he was like, nah, I've never done it. And I sort of responded, yeah, I've never done it either. Spend too much time working on the business, not enough time messing around with all the different flight options and stuff like that. And as an entrepreneur, that's really what you want. You want to be able to focus on the things that are core for you, the things that are most important for your business. And I think in most cases people should have an understanding of the general side of taxes, but you don't want to have to be an expert in every single aspect of it, because the amount of benefit you would personally get from that is probably less than if you spent that same amount of time either working on your business, growing new businesses, new product lines, or taking some time off and just enjoying life.
Yeah, I mean, at the end of the day, nobody wants to, nobody wants to pay a lot in taxes. Nobody even really wants to pay their accountant a lot. But at the same time, if you're making, if you're growing your income and you're making $10,000 more a year, because you got to focus these extra hours, then why not spend the money on hiring somebody that actually knows what they're talking about? So I definitely agree with having services, and I'm not trying to because if I wasted 30 hours of my own trying to figure this stuff out, it wouldn't be worth my time.
Yeah. And the IRS publishes every year an estimate of how long it takes people to do their taxes, and believe it or not, for people that live inside the U.S., so they're not even looking at these extra forms where you can exclude income or get tax credits or any of that kind of stuff. And it's like 30 hours for those people to do their taxes. So you can imagine the additional complexity if you're then a small business owner and you're living outside the U.S. and all this kind of stuff where all of a sudden the amount of time and the amount of detail that you need to understand in order to do your taxes is really just growing exponentially.
Yeah, it's crazy. And so I wanted to ask you a little bit more about the LLCs before we moved on.
Sure.
So I'm looking into incorporating either in Wyoming, Nevada, or Delaware. And these are the three that everybody talks about. Do you have any personal opinions about which one would kind of be the easiest as a small business owner?
Well, first off, the main reason people use those, Delaware gets used quite a bit because it's got a very long-standing set of legal precedents, so you sort of know exactly what's going to happen. Nevada and Wyoming are used because there's no state tax. So depending on your situation, I think a lot of public companies, I actually heard recently, I think it was 87% of companies that have gone public in the U.S. this year were incorporated in Delaware.
Oh, wow.
And the main reason for that is because of the legal precedents that Delaware has set up. My personal opinion would be, and again, this will vary for different people with different circumstances, but somewhere like Nevada or Wyoming is a pretty good choice because you then don't have to worry about state tax on the business. Mm-hmm. And so either of those are probably fine. You probably want to look at which one has the most flexibility for you personally, as far as not needing to be there, whether or not you need to have an office set up there, even if it's a virtual office set up there, how hard or easy it'll be to set up bank accounts outside of that specific state, things like that before you make a final decision. Okay. I know Wyoming, built into the bylaws of any kind of LLC from Wyoming, you are allowed to set up bank accounts outside of the state and things like that. So that just makes life a little bit easier. You don't want to have to fly back and go to Nevada or wherever for a day to set up a bank account if you can avoid it.
Yeah, if I can avoid it, I will never step foot in Wyoming, even though I'm sure it's a great state. But that's actually, you just gave me an idea for a great future episode. I'll get a Wyoming LLC expert on and pick his brain about that. But you mentioned the state taxes. So one thing that is a bit annoying is right now because I'm a sole proprietorship in California, my home state, I have to collect state taxes on all sales. And because California is such a populated area, a lot of my sales come from California, and I'm just sitting, I just have all this California state tax that I collected just sitting in my personal bank account. And I just have a feeling that that's not the best idea.
Well, California is sort of a separate place, if you will. What you're talking about, I believe, is if you have, I think it's more than 25% of your business comes from California. You have to pay state tax there, even if you're incorporated outside of California. But you as a sole proprietor and coming from California, you'll probably be filing and paying state taxes for a long time, unless you can move to another state and become a resident of another state. California is like a pit bull with a bone. They don't let people go. You'll be filing for a long, long time.
Okay. All right. So
it's a point that we've made in other cases where if you're looking to move abroad and start a business and run a business, you might be better off living in another state, getting a different driver's license, all that kind of stuff before moving abroad, so that you can be released from California.
Yeah, that's a fantastic idea that I wish I wish I listened to this podcast episode 4 years ago, because I could have easily, went to Vegas for a weekend, got a driver's license. I could, condos out there are so cheap right now. You could probably just buy a place, if not just rent a PO box. And, by now, I mean, it's been 4 years, so I could have easily been a Nevada resident by now.
Yeah, and that would save you from having to file taxes in California on a personal level. But what I was mentioning at the beginning was, on a business level, if you have a certain amount of sales in California, you'll still have to pay tax on that. So depending on the type of business you run, you might want to watch out for what you're doing in those cases as well.
Okay. So if somebody has an e-commerce store like myself, and we're collecting, whatever it was, 8% sales tax from every single order from California, how do I actually give that back to California?
Well, you probably have some sort of filing, quarterly filing requirement for California. I'm not an expert on California state taxes. I've done research on it in the past for clients, but I'm not an expert on the state in particular. But I'm sure there's some sort of quarterly filing that you're responsible for doing in order to pay that state tax.
Okay, so I should look into that, because I don't want to just be holding their money.
Right.
Yeah, especially because when I look into my bank accounts, it always looks like it's a lot more, because a couple of thousand of that is owed to California, and I know I have to pay eventually.
Yeah, it can give you a false sense of confidence if you have a bunch of money in there that has been earmarked to be paid to the state.
Yeah, exactly. So a lot of the listeners are people that travel, and I mean, my advice, that I've heard so far, is just try to put as many things on your credit card as possible, because at least that way you have a paper trail. Is that enough, or do you need to to take pictures of your receipts and keep receipts?
It's not always enough. I would definitely recommend, if you've got an iPhone or any kind of smartphone, just snap a photo of the receipts as well. The credit card gives you an okay paper trail, but really you want to have a photocopy of receipts, or a picture of receipts as well if you can. And so somebody, like if you're one of our clients, what you can do is just take pictures of them and upload them to your secure file, and you'll just be able to store them in there until the next tax year.
Okay. Yeah, I really like your online filing system. I actually just logged in. I uploaded my questionnaire, and I'm going to start going through and uploading my bank statements per month, and whatever receipts I have as well. And it's just a great, easy filing system. So I really enjoy that.
Oh, great.
Yeah. So to kind of walk people through, what exactly, Greenback Tax Services does. So I signed up, and I was actually very surprised that you guys don't even ask for my credit card number right away. You just let me, you basically, you're helping me out up for free up until the point where I actually need to file.
Yeah, the idea is that there's a lot of people out there that are concerned about their taxes. They're afraid of how they're going to get treated by the government, or they're afraid that they're going to go with a company that's not very reputable, and who knows who's going to be doing their taxes, kind of thing. So what we try and do is put people as much at ease as possible. You're going to be working directly with an accountant, CPA, or an IRS enrolled agent, you're going to have a folder where you can put your documents in. You share them directly with your accountant, and nobody else is messing around in those folders. And one of the it's actually kind of funny thinking back on it, but when we first started up, I actually was talking to a prospective client, and we're on the phone, and he said, so are you guys some kind of like Russian scam or something? When I put my documents in there, you're going to steal my social security number and run off with it, or what's going to happen here? And I was just explaining, no, here's my background. My wife and I started this business together, and this is what we're doing. You don't have to worry about anything like that. And so that's one of the reasons that we don't do any kind of billing or anything like that until draft tax return prepared, or until we've done some work for you. Because we don't want people to be worried about it. We don't want people to think it's some kind of scam that we're just out to charge you money for things and rip you off or anything like that. Because it's really not the way the business is set up. It's not the way it's not the way we operate.
Yeah, and I think it's fantastic that you guys, I would assume you guys get most of your business through word of mouth, through referrals. You guys do a good job, and people recommend you, and that's how it grows.
Exactly.
Personally, I wouldn't want to just Google income taxes and then just pick whatever the top result is, or the or the Google ad that pops up. And the only reason why I knew 100%, hey, I'll just go with these guys, is because it was recommended by other entrepreneurs that I know in person, and they've used you, and they know you, and they've met you before.
Right. And that's arguably the best way to find a company to work with. If you can get a personal recommendation from one of your friends, that's it's pretty priceless.
Yeah. So a lot of people, I'm sure, they use things like TurboTax. What are the big benefits of using Greenback versus something like TurboTax?
Well, TurboTax, I think, is a fine product if you're in the U.S. But I think a lot of people have problems with it if they try and use it outside the U.S. I know people who are, very, very smart, financially capable people who have made messes out of their taxes using TurboTax. And it sort of gets back to do you want to spend 30 hours, reading up on tax code and, on the phone with the IRS trying to figure out every exception, or do you want to just give it to somebody that, that's what they do all day? So TurboTax is fine, but from what we've seen, a lot of the returns that people do themselves with TurboTax, they end up making mistakes on, and then you sort of have the worst of both worlds, because you're paying TurboTax to do your taxes on there, but then you have to file amended returns and everything like that a couple years down the road to make sure that the returns were done correctly, and to make sure you get any tax credits you're due, or that you properly excluded income and things like that.
Yeah, that makes sense. I've used TurboTax in the past when I was working, when I was in college, not really making any money, and it was okay for that. But now that I'm actually making like a real income, and now that I have all these travel expenses and business expenses, there's no way I'm going to use a service like that, because it's already confusing enough trying to figure out what I can get away with, versus on a software like TurboTax. I think it'd be, either one or two things will happen. One is there's not even going to be a place for me to even put these exclusions in, or they're just gonna let me put whatever I want in, and not slap my hand, and I'm gonna get in a lot of trouble for that.
Exactly, and that's where it's nice to have an accountant that you can work with directly, because I don't think any of our accountants will slap your hand per se, but they will let you know what is allowable, what's not allowable, and how you can avoid trouble.
Okay. So for people who are basically bootstrapping their business abroad, they're living, they're traveling, they're living somewhere else, they're growing their business, what are some common legitimate expenses that they can write off?
Well, if you're living abroad, you can write off a bunch of stuff. You can write off some of your housing expenses depending on where you are. Now, there's a threshold. It's about a $15,000 threshold that you have to be spending more than that before you can start writing off housing expenses. But you can write off housing expenses if you're above that. And depending on where you are, if you're somewhere like Hong Kong, you can write off about $100,000 a year in housing expenses. So that can be pretty significant for people. Basically things that have to do with your business. If you're buying a computer to run your business, you can write off your computer. If you've got internet, that you're paying for an internet subscription, that could be a legitimate business expense right there. So, things that you're actually doing in your business or using for your business, you can write off. Where you start to run into trouble is where you have things that are sort of business and personal, business lunches and things like that. Generally speaking, you can write off the piece for the client, but not for yourself. Business travel, generally speaking, you can write off the part of the travel that had to do with the business side, but not the week you spent at the beach. So, things like that. Again, you're going to want to keep receipts. You're going to want to talk to somebody that knows what they're doing around it. But I wouldn't count on being able to write off every time you jump on an airplane or anything like that. Because if you ever did get audited, it might be disallowed, and that could lead to taxes and penalties and things like that, which nobody wants to have.
Yeah, I guess the worst thing that could happen is 3 years down the line they hit you with a huge bill of $50,000 or something.
Yeah, and we've seen that happen to people who didn't know they needed to file, and entrepreneurs that didn't know they needed to file taxes, and so weren't paying self-employment tax. And then even though they were able to exclude a lot of their income using the foreign earned income exclusion, they still owed all this money in Social Security and Medicare. And, that can really add up after a couple of years if you're making some money.
Yeah. Well, I mean, I guess after, sitting down talking to you about this, I realized I can get away with stuff for a few years, but then it's going to come, there's a big chance to come back to you. So you might as well just do it correctly from the start.
Yeah, that's always it's always the best idea. Just do everything the proper way from the get-go, and understand the rules. Ask your accountant how what is and isn't allowable, and work within them, because that's going to be the best way to minimize the amount of tax you're going to owe.
So is there? Okay, that definitely makes sense. So I know that taxes aren't actually due until April, whatever it is, April 14th. But is there a big benefit of signing up now and just kind of getting your records in order now before you even get your first W-2 form or your first 1099?
Well, this time of year is a great time to start thinking about tax planning for next year, because if you've got expenses that you need to do for your business and things like that, now is a good time to start spending some of that money if you're able to. On the personal side, it's also a good time to do what people call tax harvesting, tax loss harvesting. So, if you've got some stocks that are doing well and some stocks that are doing poorly, you may want to offset some of those if you're going to sell some anyway, in order to cancel out the gains with the losses and things like that. So, depending on your specific situation, it can be a good time to start talking to your accountant now about ways to minimize your taxes for next year. Because once December 31st passes, you're not going to be able to take action on your 2013 taxes, if you will.
Oh, that definitely makes sense. So if I want to make any big purchases, I should do for my business. I should do so before end of December.
Yeah, exactly. Also, it's a good time to start thinking about any kind of retirement planning or anything like that. If you're thinking about having some extra money that you can put aside. Now, that again, it gets a little bit tricky because if money's excluded using the foreign earned income exclusion, if it's foreign earned money, you might not be able to put it into IRAs and stuff like that. But again, it's good to talk to an expert about specific situations. because in some cases you will, in some cases you won't.
Okay.
The tax deadlines that people need to know about. The general tax deadline is April 15th, and I don't know why the IRS has it set up this way, but if you owe money on your taxes, you have to have it paid by April 15th. Now, if you're an expat, if you're living overseas, you don't have to file your taxes until June 15th. So, every year we get people saying, wait, that doesn't make any sense, and they're right, it doesn't. You don't have to file till June, but you have to have paid by April. Just so people are aware of that. And then, you can also get extensions if you need extensions. You can get an automatic extension to October 15th pretty easily just by submitting a form. And, if you need more time, or, if you're going to be traveling a bunch and you don't want to deal with any of it, you can use those extensions to push it back to October.
So I know a lot of people love extensions and love pushing things back. But just like with my credit card, even though I don't have to pay it for 30 days, I like just to pay it off, weekly or before it's due, just so I don't have to think about it, just so the money is out of my account, and I don't start thinking I have more money than I do. Is there any downside to me paying my taxes, let's say January 15th?
All right. Well, there's two things. The first would be an opportunity cost point of view. So if your taxes aren't due until April 15th, but you pay them on January 15th, you're losing out on the opportunity costs of that money for that time period. Now, interest rates are so low that you're probably not losing a whole lot. But in theory, you could buy a 3-month CD or something like that with that money, have it still be 100% FDIC insured, and make a little bit of money on the interest in the meantime. So that's one side of it. The other side of it, and the argument here can go both ways, but I've heard people argue that the IRS has quotas each year for how many people they're going to audit. And some people say that by filing by the April deadline, you minimize your chance of being audited because you're filing by the April deadline, the IRS is overwhelmed, and so fewer people get audited as a result of that. I've also heard it argued that waiting till the last possible moment, filing on October 15th may minimize your chance of being audited because the IRS may have already filled up their quota of how many people they're going to audit for that year. So unless you have a bunch of red flags, the risk of just getting tagged for a general audit might be lower if you wait.
Oh, wow. I actually would have thought the exact opposite. I would have thought that you would just be pissing the IRS off by saying, oh, I'll get you your money next month. I'll get you your money next month.
Well, I think there's a lot of opinion, and I haven't seen a whole lot of fact based on either argument. But basically the argument is if you pay your taxes by April 15th, but then you don't actually file until October, if the IRS has already met their quota for audits for that year, they may not be looking for people unless there's a lot of red flags on the return.
Okay.
So that's sort of the argument for waiting. Mm-hmm. Usually what we see is that people just procrastinate.
Yeah.
So people that get out of the habit of filing for the April deadline, then you have the summer. You don't want to deal with it over the summer. Then you start getting back into September, October, and all of a sudden people are panicking because they haven't done it. So what I try and do is just get mine out of the way every year because I don't want it hanging over my head. So that's what I recommend to people. There's no rush to get it done for April 15th, but if you can get it done early, like in February, and then you're not worried about it the rest of the year, that's a pretty good thing to do. Or if you're able to push it back a little bit, you get the extension, and then you do it over the summer or something like that, so you're not ramming yourself up against the October deadline. That's also a pretty good way to do it.
Okay. Yeah, that definitely makes sense. And I personally don't like pushing things back and having the stress of it. So I think what I'll do after this conversation is, I'll slowly gather everything, and then maybe in February I'll get anything prepared. But I can always just kind of hold off on filing it until April 15th, even though it'll be kind of just done in February.
Yeah, there's once you have it done, just getting it e-filed or mailing it in, that's the easy part, right?
Yeah.
But especially if you might have cash flow issues or something like that, if you've got a business where you hold inventory and stuff like that, you may want to have it prepared early in the year so you know what your tax liability is, so you can make sure you have the cash on hand to pay it.
Yeah. Well, I mean, what's nice about the drop shipping model is everything is, there's no inventory. So all the money, any product I sell, I pay basically after the customer pays me. So I actually have the kind of the opposite problem of most e-commerce businesses is, we have just cash sitting in the bank that I really don't know what to do with right now.
A cash flow positive business is never a problem.
Well, I really appreciate having you on. If you guys want to check out the Greenback Tax Services, it's going to be in our show notes on travellikeabosspodcast.com, and it's going to be episode 11. And in there, I'm going to embed a couple of videos that I sorted through a bunch of the videos that David uploaded onto his channel, but my personal favorite one that talks about how to keep your expenses organized. He talks about the 95K. He talks about a lot of that. So that's a great video to watch. I also have a link to sign up for Greenback, and you guys can basically sign up and just start the progress now without putting in your credit card number, without really any obligation. But you can see how easy it is to basically just start organizing everything.
Yeah, and we're taking on new customers, so feel free to contact us anytime, and we're here year round.
All right. Well, thanks again, David, and have a great one.
Great, thanks, Johnny. It's been great being on the show. Thanks for that.
All right, bye-bye. Thank you for listening to the Travel Like a Boss podcast. If you want to hear more, including the bonus How to Choose the Perfect Niche episode, join our mailing list at travellikeabosspodcast.com. See you next week, and remember, if you want to travel like a boss, you need to be your own boss. So start your online business today and start living the lifestyle you've always dreamed of.